Trading is a psychological relationship with hope, fear, and belief. After 10 years, I learned success is about knowing which opportunities are worth taking. I remember when an advertisement came through the post. It got me thinking, yes, this is it. I thought this chance shouldn't be missed.
That is how opportunity speaks to people, quietly but persuasively. Deep inside, your thoughts weigh the risks.
Be careful. You've been here before. But what if this is different?
And that question is powerful enough to move people into action. The thing is, you feel you have to go for it. If I don't, I'm going to miss that opportunity. Hesitation is why people remain ordinary. You stare at the screen thinking, I knew that was going to happen. Then comes the cycle every trader eventually faces. Yes, a few wins. I'm unstoppable. I finally figured this out. No, it's all gone.
This could be a mother. What if this is the opportunity I've been waiting for?
The markets reinforce this mentality every day. Prices moving without you, rallies missed, trends gone before you enter.
Saw that coming.
Fear tells you to close winning trades too early. Greed tells you to hold losing trades too long. Am I chasing freedom or chasing illusion? Am I building skill or feeding addiction? How many more years can I continue doing this? In trading, survival matters more than excitement. The real battle is emotional control, patience, and risk management. Still, the markets remain compelling. Trading is a mirror, reflecting discipline, greed, fear, and resilience. And maybe that is why people continue. Not simply because of money, but because the pursuit itself becomes meaningful. The danger is when opportunity becomes confused with desperation. The best traders wait calmly and act only when the odds truly align. After 10 years in the markets, one lesson stands above the indicators and strategies. It's about knowing which our work takes on. Real opportunity is knowing when to act and when to walk away. Because sometimes the strongest decision a trader can make is not entering the market at all. Training in the stock markets is not only about learning how to buy and sell. The market step pays senior route of buy your discipline. One of the first things traders learn is support and resistance levels. These levels are important because they show where price has reacted before. At first, these are just lines on a chart. But after years of watching the markets, you begin to understand that those lines represent human behavior. Fear begins to realize, counting at the same place. Support holds perfectly and the market rise pushes the market back down sharply. The market breaks through completely, surprising everyone. The trend is your friend. It shows market strength.
Exactly. Ignoring it causes losses.
The trend reflects market to avoid danger. A calm market can suddenly become volatile because of a single headline. Technical analysis and world news work together. Awareness matters. However, perhaps the most important lesson in trading is learning to remain calm. Without calmness, clear thinking disappears. Fear causes traders to panic. Greed causes traders to become reckless.
After losses creates friends, shrinkage creates
Calmness allows logic to speak louder than emotion. The difference is emotional control. Trading is a long journey of learning. Calmness teaches wisdom. The best trade is the one you don't take. Without a plan, trading is just gambling dressed in charts. A strategy gives structure, creating rules where emotions would take control. What type of formula can I create? What system can I trust when pressure builds? What tools are actually useful and which are only distraction?
Because there are thousands of indicators, strategies, opinions, and signals available.
One trader says buy, another says sell.
That is why every serious trader creating and mentioned but copying blindly but matches their personality, discipline, and understanding of the market. That is why every serious trader eventually understands the importance of building blindly, not creating a method that matches standing the market. The tools themselves are not magical. A moving average is only measured momentum. MACSI only reflects shifts in trend strength. The real power comes from how the trader combines these tools together with discipline and timing. A strategy plan must answer important questions clearly. When to enter, exit, risk, confirm, invalidate, and protect. Because every trade carries uncertainty. There is no perfect formula that removes risk completely. That is where focus becomes everything. A trader must learn to think with precision. Like a scientist, they search for repeated patterns in the market. And through repetition, the trader slowly develops confidence. But perhaps the most difficult part of strategy is following it consistently. But the most difficult part is following a strategy consistently. Fear causes overtrading. A strategy only works if discipline protects it. Mindset becomes part of the formula. Think long-term, not emotionally. One trade means little. It's hundreds managed correctly that matter. The markets reward consistency more than excitement. Success is comes from repeating high-quality decisions with discipline. The magnifying glass is focused on the trader themselves, on their habits, their discipline, their discipline.